Good morning, everybody. Welcome to Tuesday and the Flow Show. And good morning to you, K-Man.
Good morning, everybody. Good morning, Ryan.
Hope everyone is doing okay. Lots of fun and games this morning. We'll start off, well, China seems to be leading a lot of the news that we're getting at the moment and some of the moves. So that's where we're going to start. Now, we had overnight some tweets coming out, some news coming out that there was going to be a big COVID briefing at 7 a.m. this morning UK time. That got the market a little bit excited. As you can see there from $1, you can see that move down from 724, 25s all the way down to dipping under 716. A little bit of excitement coming in there. Lots of people drawing the conclusion that it was going to mean that they were going to announce some additional easing measures. So the market got itself a little bit balled up there. As you can see, Chinese stocks big in the green there, gapping up much higher there. So we got to this period, or this press conference, this briefing, and in the end it wasn't much altogether. They mainly were doing it about vaccines. So they're going to allow the elderly to take their boosters 3 months after their prior vaccine. The rest was really all about not easing measures, but just taking reasonable requests on COVID from people. It all sounded like it was a bit of a press conference for the West rather than for China themselves, which is something the Chinese can do. They can talk with one mouth to Western media and talk with another to domestic media. But not a lot came of it in the end. No big news on easing restrictions. There was even a headline touted around from one of the sources we follow on Twitter, who can be a bit dodgy, let's say that, who said that they are adamant they're going to stick to their zero COVID policy. So a lot of fuss over nothing really for the markets, but in the large main, risk trades have held their gains. Aussie dollars held its gain. That was a pair that also rose on that expectation, and it's managed to hold its gains. I don't know if we've moved into something else entirely. But while we're talking of COVID, their reported daily rate dropped a touch to 37,477 from 38,800 prior, or yesterday. Shanghai Disneyland is to temporarily close today, and in the Guangzhou area, they're going to extend COVID curbs in parts of the Haizhu district. So really, nothing's changed at all there. Kay, what did you make of it? I know you're up with me this morning watching that.
I don't see many changes in what they've said or done. Seems like they're just trying to calm the crowd a bit. But yeah, nothing really changed. We did see this CNY strengthen a bit, as you say, but I reckon it's a bit of hope for first, and then probably people just squaring up positions a bit, and now we're back in the middle and into month-end flows. Perhaps there's a few of them around there as well.
Yeah, exactly. I did nick a bit as we dipped to 718, because I thought there's no way that China's just going to go a complete 180 on their COVID measures. So I did a bit back into my existing long 718, and okay, I did some bits in as well. But it's not going back up, which is maybe a bit of concern. Maybe we've moved on to further month-end stuff, and a bit of a weaker dollar around the grounds elsewhere. So going to keep an eye on that one. Over to some of the other news. Bit of data out of Japan, unemployment and retail sales. Where are we there? So the unemployment rate was unchanged over last month. It was expected to lose a pip down to 2.5%. Large retail sales came in at 0.2%, not as strong as last month's 1.5%. Retail sales year on year, 4.3%, missing expectations there and a bit lower than last month, but nothing too much to worry about on that front. Not been many headlines out of Japan, unless you picked anything up, Kay?
No, but what did Kishida say? Kishida said that he plans to up spending for defense. It was in the pipeline, but perhaps keep in mind that they are still injecting money in the end of everything. So not touching the yen right now. We'll talk about it a bit later for the currencies, but because it does seem that the yen is a bit of the flavor of the month end as well. But whatever goes in the background, yeah, those data in Japan are very up and down right now, but still struggling, right? And but for the time being, yeah, nothing really. Somewhere else in the headlines, but that's more speculation about what may happen once Kuroda leaves office. But I think there's plenty of time to front run that one.
Yeah, we'll definitely bet that one around enough times up into next year. Plenty of data coming out this morning in Europe, CPI numbers. Germany doesn't show there, but the regional CPI numbers are all coming in a little bit lower on the month there. We get down by about 2 pips, so some of the areas moving from 10% to 9.9%, 9.8%, so a bit softer inflation in Germany. It's still all running in the 9% mark. We need to see, obviously, if that's going to be a trend lower. Spain is continuing its trend lower in inflation, now down to 6.8% on the CPI and 6.6% on the Eurozone measure. So as you can see there, they've been dipping in inflation for a few months now. So potentially we've seen peak inflation there. If we're going to see that in Germany, we need to see a few more months. There's been a lot of skew in that from various measures that came in the summer, cheap rail tickets, and that sort of thing that have washed out, and now maybe the washout is washing out. So we'll see what happens there. In the UK, we got some consumer credit data, mortgage data there. Mortgage approvals missed expectations and were quite low. Mortgage lending as well moving down. I think that's probably got a lot to do with what happened with rates and mortgage deals getting pulled when we had all that mess with Truss and Kwarteng and the pension companies, and everyone getting a little bit of a panic there. So that may be one of the reasons why we saw a dip, as we know that mortgage companies stopped offering mortgages for a couple of days. That may have influenced things, put people a bit more cautious. On the consumer credit side, there nothing huge going on there. What I tend to look at within this number is credit card spending, and the credit card spending rose to 400 million from 100 million last month. That's not big numbers at all. What I look for in the credit card data is to see if consumers are struggling, then they tend to put stuff more on the plastic, buy now, pay later. That can be an indicator that there's issues with personal finances and stuff like that if credit card spending starts shooting higher. But based on 400 million, up a mere 300 million on last month, there's nothing that I can see that says there's any red flags being waved there. But as ever, a revolving situation to keep an eye on. Back to the Eurozone, and we had the economic sentiment, final consumer confidence numbers there. A little bit better on some of the numbers there. Inflation expectations, this is a fairly big one though, and one that the ECB keeps an eye on, dropping to 30.1 from 37.3. And firm selling price expectations also lower. So again, there's signs that maybe we have peaked in inflation, particularly in expectations in the Eurozone. We keep an eye on that and see if it falls into a big trend lower. And while we're on Europe, a couple of ECB bods are out. DeCoste said hikes so far are not enough to return inflation to its goal. Lagarde made an appearance in Parliament at a hearing. Nothing really new. Says she wouldn't go so far as saying that inflation had peaked. Inflation is expected to slow eventually, and the risks of inflation outlook are on the upside. And that the ECB will raise rates as high as needed to reach their objective, and may need to move rates into restrictive territory and still have a way to go with hikes. So reinforcing her newfound hawkish stance that she's been in for the last few months. Definitely not dovish, but not quite to the level of Powell hawkish, but in ECB terms, that's pretty hawkish anyway. Over to the Fed, and Mester said the cost of stopping tightening too early are high. Williams said there's more work to do on low inflation, more hikes seen helping restore the balance in the economy, and that they could lower rates in 2024. Bully Bullard was out saying that rates need to go higher to bring inflation down, old message from him. And if we get rates to a sufficiently restrictive stance by the end of Q1 2023 and hold, we could have the conditions for inflation to subside in a reasonable time frame. So he's putting a bit of a number on where they may pause hikes at the end of Q1 2023. We'll find out at the next FOMC and the dots what the others think of that. Fed's barking. He's the financial stability man, rules and regs man, but he now and again he comments on monetary policy, and he did so yesterday, saying they've got to get inflation under control and make sure of it before anyone does any talk of loosening. And how long rates stay high will depend on what happens with inflation. And over to President Al-Bidi is expected to call on Congress to intervene to avert this potential railway strike that's coming. There's a 9th December deadline before or when they need to enact any laws or put in legislation or do whatever they want to do to try and stop this train strike. So that's the deadline, December the 9th. And in cryptos, another one goes pop. BlockFi is filed for bankruptcy because their substantial exposure to its FTX created a liquidity crisis. So the fallout from that is ongoing. That's all I've got today on the headline front. Kay, any other extra bits and bobs?
No, not on the headlines. Nothing really to add. The one thing I would like to add though is that yesterday it seems that OPEC Plus is drawing a bit of a line in oil, and we're talking about Brent here around $80, because yesterday they already said when oil was coming off, they already said that they may actually increase the cuts again if oil prices continue to go lower, and that was when Brent was on the approach of the $80, and we are trading $4 or $5 higher again. So that was OPEC Plus is just giving another middle finger to whoever wants to lower oil prices in official DOM, and saying that no, they will try to keep the prices high. So that was the bit that came out at the end of our day, I think.
Yeah, I think probably also a bit behind the oil was all the China stuff as well. So it's had a bit of a double win perhaps there. Yeah, so if we're speaking, let's have a look what we've got coming up today on the calendar. Busy, need to keep an eye on it. Canada GDP, the pan-German CPI numbers at 1 o'clock there. GDP from Canada there. It's for Q3. That's good, because usually they're so far behind. I wouldn't be surprised if it was Q3 2021. Anyway, some house price data from the US, which could be a bit significant. Prices finally looking like they might be on the slide. We need to see if that's going to pick up pace, especially with how high mortgage rates have gone. And then consumer confidence in the US later on. Again, keep an eye on those inflation expectations. Going to be a big driver for Fed thinking, particularly into next month's FOMC. Right, just having a look at some of the prices, and as usual, if you want us to look at anything in particular, please chuck it up in the comments there, and we shall take a beady look at it. In terms of my trading, I'm really not looking at anything new at the moment. I was hoping maybe we get some good levels in dollar yen, up towards the highs, maybe into the 140s. That still may come on Powell. But we had a bit of a bounce yesterday, and we're looking a bit weak today, so keeping an eye on these lows here. I was umming and ahhing about a long down here yesterday. I just didn't like the price action and I left it alone, which proved not to be the best trade I made. Back to dollar one, as I say, still long and managing here. I'll see what I do with this latest ad at 718. I may look to quickly knock a lot of it out if we get a move up back above this 719, 720 area. That's where we need to go to keep this phase of the rally alive, or else I fear we're going to be heading back down to maybe the 712, 710 area there. Currently running my stops on the longs from down below and this portion at 714. I'm not willing to give a lot back on that trade so far. Euro sterling, got well bought up amid what looked like end of month flows yesterday, with the euro pretty much bid across the board. That's given it up today, or latter part of yesterday and further today, down to the 86 level, 85.90. Bit of a hold down there. It's one of these old support and resistance areas over time. So after a decent move back, it's holding there again. We failed to break out this zone really around the 86.70s, so it's really going to play the battleground between there and this 86, 85.90 area to see whether we're going to get the next direction. If we do break down, then we're going to be heading back towards these 85.70 lows, whereas if we have another test up here, we could potentially break and get us up to the 87s, 87, 15, 20 area. There's also been a long-standing support and resistance zone, and I'll just show that there. So you can see plenty of action along that 87, 87, 15, 20 area there. Aussie dollar still long on this one, and sitting and waiting. Maybe we're going to get a move up towards these highs, and maybe another push to 68. Depends what's going on with this end of month stuff going on at the moment. I still may take a little short up into 68, just a separate trade, depending on the price action. If it looks like it's going to resist again, might as well try and make some pips on the other side. But the low, not getting down as far as the prior low, so maybe we're going to start to build a series. Call it a bull flag, whatever you want to call it. Keep an eye on the lows here. If we get down to maybe 66, 70, 80s, hold there, then potentially we're setting up for a proper break higher. That's what else am I got on? I keep forgetting what I've got on today. Euro Mex, have a quick look at that, and I think Kay, you're back in this one, aren't you?
Yeah, no, don't look at it, mate.
Oh, blimey, look at that.
No, it's crazy.
Yeah, that's looking like a breakdown now, isn't it?
It's quite crazy. I'm going to have a look at it as well, but yeah, I've actually gone back in it through the legs, but I do think we are seeing some end of month from European asset managers also. I mean, dollar MEX is absolutely getting hammered this morning.
Yeah, I looked at that yesterday, and it was every time I looked at it, it was 1930, and now it's been clobbered as well. So it's all looking a bit ugly around. But yeah, I'll let you.
I've just closed mine actually right here, because if it's end of month, perhaps there's going to be some stop, and there's a bit of support here in the Euromex as well. I'll have a look at it on my charts. It can go further. Nobody knows where it stops at the end of the month, but this is pretty a pretty big move, just coming out of nowhere, really.
Yeah, it definitely. I mean, I think I was pretty lucky getting getting what I did out of the long yesterday. The swap into a long when I was short up here, and we made decent money down to the low 20s, and then I got flipped long yesterday and managed to get the majority of it out before getting stopped the other way. But yeah, this is definitely looking a bit creaky at the moment. Maybe one just to leave alone for a little bit while we get through the month end stuff. Okay, do you want to hang on?
Yeah, sure, mate.
Yeah,
yeah, let me grab the
these
screen.
questions. Yeah, we'll look at euro dollar and cable, Constantine. Bloomberg, Gavin saying Bloomberg News this morning talking about the US house prices dropping
Yeah, that's
at a fast pace. Yeah, we're
right?
gonna see that, I think, potentially from the data. Where am I? Yeah, all yours, mate.
Okay.
What else?
Let's go on to the euro dollar for a starter, right? Just first on the real short term. Yesterday, we were trading value date end of month, and I was saying, like, be careful what's happening on the end of month. We can see one move one side, and then the other move to the other side. And exactly just before our noon time, it's a bit strange that we didn't do the top at noon exactly, but the dollar was the euro was bought up the whole morning yesterday, and just before noon it seems to have ran out of steam and then started to come back, and then the afternoon kicked in, which with what I said on the on our chat in our chat room, saying that, like, beware, because the value date end of month we can see some US corporate activity buying, needing to buy dollars, and that's exactly what happened yesterday afternoon. It did run virtually into the close in New York, a little bit ahead of the close, but that's the turnaround that we saw yesterday. So we're back into kind of similar scenario this morning. We opened a bit lower on the euro, then a bit of up and down into the as the CPIs came out. But see this yo-yo here? We're back towards the highs of the day. So keep an eye on the clock, as I always say. When it's end of month, you always keep an eye on the clock, because moves can come out of nowhere and take the price to one or the other direction. So basically, what I'm watching here, we spoke about those levels up in the 105s earlier. So those capped again yesterday. I think it's a good enough area to monitor. Perhaps after Powell, let's put it that way. After Powell, we will see where we end up, above or below, and then we have a heavy data coming out for the rest of the week as well. On the underside, you can see a small support line here, which is a bit holding. Some people saying that we could be in the process of building an inverted head and shoulder, but I don't like the look of it to be personally. But the first line of defense should be around yesterday's lows, and below there around 102.70 once more, which is the little upside channel or flag or whatever that we built here. We came to retest it the other day when it was trading a bit lower, and when the line came in lower, and we bounced off it again. So that's a decent line to keep an eye on for what I am concerned in the shorter term. But again, I'm not sure if I'm going to have a lot of positions on ahead of the Mr. Powell, and especially with end of month, it starts to look a little bit random, because this morning we had this bid coming in cable, bid out of nowhere, looked to be looked to be month-end starting as well, and then all of a sudden we ran out of steam, and the whole thing came back off again. So be very careful with those moves that we are seeing end of month ahead of Powell. I'd really, if you want to trade anything, I'd say trade it rather in a rangy style than really looking for breaks on any side into tomorrow. At least if I want to trade anything more, that's what I'm going to look for. Just one thing that I wanted to add on the euro dollar, but it doesn't need a chart. If we look at, and I haven't seen the confirmation yet by the bank's models, but it looks to me that we may see a little bit of euro supply into tomorrow's last fixing of the month, because there's a bit of discrepancy between the performance in the US and European equity. So I'm going to keep an eye on that, and perhaps that could give like some move, which may be interesting into tomorrow's fixing. And I think perhaps yesterday was already a bit of a blueprint of what is possible to see. Okay, over to the cable. Where was this top? There was something in the 121s the other day. That was a nice top here. Couldn't come back to retest the low of this mini channel, but I'm keeping an eye on that one. It's a bit lower now, around 118.75. In the middle, we see 119.85. Bit of a support around here as well. Prior tops where we stopped yesterday, 119.5. So 119.50, 119.85. Those are some levels to keep an eye on. Top side, perhaps. If we can revisit high 120s, that may be enough for now as well. But again, I'd rather trade ranges than really breaks into the month end. Euro sterling still interesting. Of what we've seen, I still think those levels 85.75 and towards the 85.40 zone are interesting in the perhaps a bigger scheme of things. If we get a move back down into the end of month fixings, I may try to catch a knife again there, just for the price action, and then see if we can hold around this 85.40 or not. I was long, but I took most of it up. I really have only a sliver running, not really worth mentioning. For the post end of month, I will have a look at this 86.70, 87, the figure zone. That is going to be the big marker. Top side, we have seen the last retest capped over there. So we've got a, what is it, 150 points or so zone to monitor in euro sterling, and I think mostly, as I said, for once month end is over, if we get breaks on either side, this is going to be an interesting one to watch. For the rest, oh yeah, dollar CAD. I had a little quick play in that as well. The 135 zone still capped 135, 135.15. That's where dollar CAD is now capped. People are watching this head and shoulder formation with the resistance at 135 as well. It's still working. So bear that in mind, 135, 135.15 dollar CAD. The underside is really 134 the figure, and then I would look at smalls wider, where we stopped last time around 133.25. This is going to be the next zone to watch. So we've got about what is it, 1 3/4, nearly 2 big figures to monitor in this dollar CAD, and right in the middle we have the 134 figure 5 to monitor on the dollar CAD. So for the time being, the 135 is still very well capped. So keep an eye on oil as well for this one. But as long as it caps around here, we may have a chance of seeing this one back lower if we actually draw a line on the lows. That should come in, yeah, around 133.5 as well. So this whole 133.25, 133.5 zone is going to be a bit more important now for the dollar CAD. I know people played Euro CAD in our room. I was not really involved. Craig actually took an absolutely great trade here, going short. I think the support comes in around initial support 138.70 perhaps. And the bigger one is going to be in the mid 137s if we ever get back down there. But I think this one is quite valid for now as well, 138.60, 70. Keep an eye on that one on the EuroCAD. And then Noki, yeah, that wasn't up and down, not really. But then I want to have a look at those emerging markets. This because the mix has got really. Yesterday we were when dollar mix wasn't moving much, we had this breakout of this trend line, and it was looking like really going to explode up to 2040. Just to have like a very violent turnaround, come back below, and now we are already trading below those prior lows around in the 1990s, and we're already back trading in on the downtrend channel that was broken, retested, and then we went higher. We're not already down. I think it's European asset managers having to do their month-end stuff, because I didn't really see anything in the Mexican peso itself to justify such a big move. It's we're talking about over 2%, 2.5% move in less than 24 hours. It's a pretty big move just to be on the back of just air. So I think a lot of it is end of month. As Ryan said, yeah, I went back in through the legs actually. Dollar max yesterday, and then euro dollar this morning on the rally. I sold it, and I just covered it on this channel because I don't know whether it's really month end or not. So I'm going to try to be patient on this one now. It does look like rallies will need to be sold again, just above 20 if we see it. Could be the first one, and then perhaps back around this one. And then once month end is over, we'll see where we trade on this one. And Powell might have an impact on this one as well, because if he would go anywhere as a surprise, it's not my base case, but as a surprise, if he would go more dovish, this one could actually jump a little bit as well, because we know the proximity of Mexico to the US. A lot of what we are seeing lately is that we're seeing the American bloc, the North America bloc, trading against the rest of the world, and we've seen it again. If you look at the EuroCAD, for instance, was a good example. Yesterday, when the euro was shooting higher, the EuroCAD went higher as well. But then the dollar came back, and EuroCAD, Euromax, they went all crashing down. So I'll keep a close eye and an ear to what Powell is going to tell us tomorrow as well. If he stays on the more hawkish side, or what my base case is, just confirming that they are going to continue with their program because the labor data is not yet really falling out of bed, whatever, yada yada. This could actually continue to go down, in my opinion. And then dollar max here, this one. This is the 3rd or 4th of March 2020 low, around 1916, which was the springboard for the pandemic rally, and we are below. So again, I don't know whether this is, what is this? I don't know whether this is the start of something, or just month-end stuff. We have to note that we are still firmly into this downward channel. So don't be surprised if in the longer run we are going to target 18s, well deeply into the 18s actually. I'm looking at the possible end of this move just back at pre-pandemic lows around 1850, but for now I'm just keeping an eye on things and see what happens later. As you say, RA dollar max has broken down, but as I said, is it month-end stuff or is it really breaking down? That's a different thing. I like to trade my stuff around, so for the time being, I'm out and watching the game. And I will resell though if we get back up to 19 and a quarter, perhaps 19 and a quarter, 19. 30, 40, I will resell this one as well. Last look is the dollar China. So we've spoken about what's happening over there. I also think there's a bit of dollar month-end perhaps in play. So we went back down below the first support around 1980, 718 and a half. We're back there actually. But we've held the prior trend line support. We actually didn't even go and test it. This comes in around 714 and a half. So for those who are in it for the short term, a stop around 714 looks reasonable right now if you're long. That is what I'm going to do with my add-on. But for the more longer term bit of it, I'm going to observe what's happening around 712, 711 here. So I've got like a double play in this. And for the add-ons that I did, I had two add-ons. One of them I let go already, and the other one around 716. I'll try to leg out of it. If we get back around this 719, 7080, which is around PBOC fixing, I always keep a close eye on what the PBOC fixings are doing. So around there, I may let the piece of it go as well, but still firmly in a bullish feeling over there. Okay, anything else?
I forgot to mention the fixing was up at 719 versus 716 prior.
Yeah,
so
it's 719.80. It's just slightly below the model expectations, but it's around there. So based on a bit stronger dollar yesterday across the board, they did fix it a bit higher. So that also makes me think that they are not really ready to try and put this one lower. Otherwise, they would fix markedly lower. Okay, quick look on the metals. Still hanging around 2130 on silver. We know where they are turning around here. It's 2134 is a 200 DMA. So we're hanging around, and I think we will hang around there until Powell tomorrow, unless there's also some fixing activity. And regardless what people say, I mean the metals and stuff. Yesterday we saw exactly the same happen than on FX. The metals coming off into the 4 p.m. London time, which was a bit bizarre. So I think there's a bit of month-end activity going on in there as well. Pretty neutral on there. Gold, same thing, neutral. First resistance around 66, 65, 66. Support 17 and a quarter. Don't change a winning team. Trade the range if you can. Otherwise, stay out. And then the big levels will be around 1805 again. And that really is it for me right now. Unless anyone else has a question. I'm giving it back to you, Ryan.
Yeah, thanks, mate. Let me steal it from you. One thing I have noticed just looking at the crypto sphere is that Bitcoin is really doing a bit of sideways. This latest stuff not really knocking it down. So there looks to be a bit of support into the mid 1550s. So it's not it's looking very consolidatory, let's put it that way, for the moment. It's not really reacting to any more news of things going bust and whatnot. So we might be over the FTX thing for the moment, unless we get any big whales blowing up there. Does it mean we're going to be shooting higher? The hodlers would like to think so, obviously, but in my opinion, it's a bit, I don't know, it's a bit in the middle. It doesn't know which way it wants to go from here. So look at these lows if you're trading it. If we break below these lows, then we're likely to get another leg lower. But unless we get above this zone again, you're talking into the excuse me, 18,000s, then we're not really going to go anywhere. But if we do get a break, then we're probably going to push up to the 20,000 mark. Just my quick view on stocks. As I said, we've got this consumer confidence data today from the US and house price data. That is a potential mover for yields and the dollar and stocks and the narrative of what the Fed are going to do with rates. So keep an eye on that. S&P is keeping the gains off the lows from the 35s. Probably if we get back below this 39 area, 39, 18, 20 area, then we're looking a bit awful again. But I see no fundamental reason why stocks should keep their gains at any time significantly. If the US is heading towards a recession, that's not going to be good for stocks, especially if that's coming with the Fed keeping rates high as well. A lot of the stock moves are on this dovish rhetoric that's coming from some areas of the market. So for me, power is still the big risk for stocks. So if you're sitting in stock longs, be careful of the power stuff coming up. But conversely, if he isn't as hawkish as I'm expecting him to be, then we could see stocks taking off once again. But I'm still, as I say, still not ready to believe that stocks going up into recession is something that computes in my mind anyway. So we may call that an early one, unless anyone's got any other bits and pieces they want to talk about today. For me, it's just about managing, looking to potentially get in some more dollar yen shorts if we get a real good pop up. So I'm just waiting for that. Big week of data still continues with jobs and stuff on Friday. So unless anyone's got any last minute requests, I think we'll call that a show for today and get back to the football if there's nothing else going on. Anyway, thank you very much, Kay. I think Stell will be back again tomorrow morning. So trade safely, make many pips.
Yeah, tomorrow we will have an interesting session, I think, ahead of Powell, and then the last day of the month, and going into the rest of the week data. We'll have a look at those, because the second part of the week could be quite spectacular if data come in out of sync with expectations. Yeah, and don't forget to be wary around the London fix 4 p.m. GMT. That's when we could get some of the bigger moves. Anyway, thank you very much, all. We shall speak to you tomorrow. Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.